Wolf, what's good, brother?
Ali, how you doing?
I'm good. How are you?
Great, man. Just happy to be here.
Dude, I'm happy you're here. We met like not even 30 days ago, bro.
Yeah, it's kind of crazy how things have sped up. I feel like it kind of feels like we've known each other for a minute.
It does.
Yeah.
At least like a year, at least 6
At
months,
least, yeah. But now it's been like 30, 45 days at the most.
Not even like 4 or 5 weeks. And then coming out to the event. And then you've been blowing my mind with this last, couple of conversations we had.
Yeah.
I just finished the book, What Would the Rockefellers Do? And it just...
What are your biggest takeaways from that book?
People say this, but this is really true. Everything that we were taught about finances is wrong.
Mm-hmm.
Credit is one of those things that, we don't really learn credit, and then you don't really learn insurance, you don't really learn taxes, but they don't teach you how to preserve wealth. See, as entrepreneurs, a lot of us can make the money, but not a lot of us can keep the money. How do we keep the money? How do we pass it on to generations to come? And it's not traditionally taught. Not in schools, not by our parents. Like, my dad actually did it correctly. But he didn't even know. He didn't teach me. He didn't tell me why he was doing it or what he was doing. I just know there's a life insurance policy.
I always tell people this is like, it's not about how much money you make, it's about how much money you can keep.
Correct.
So the biggest thing is you said your dad had a life insurance policy. And the thing about life insurance is it is one of the oldest wealth accumulation tools. And actually it's a hack too, because you can go from one generation to another being flat broke, no assets, and the next generation could be completely blessed and change their entire life for the future just by having a life insurance policy. And most people think life insurance traditionally is for death benefit. But as you probably learned, it is not for death benefit.
Actually, it's not at all. It's just a bonus.
Yeah.
Almost, right?
Yeah. So
the way to capitalize on it, obviously, that's just in case, right? Worst case scenario. But what blew my mind was when they gave the examples of the Vanderbilts and the Rockefellers, right? So they both amassed the same amount of wealth, a couple of years apart, right? In the late 1800s, early 1900s. Vanderbilt family and Rockefeller family were both worth current value, like 200 to 400 billion of today's money.
Yeah.
Back then.
Yeah.
Like 150 years ago, whatever.
Yeah.
So now with that being said, one of them within 2 generations was wiped clean, nothing left. The great grandson died broke.
yeah.
And then the Rockefellers for 6 generations are worth even more, and every single one of the family is a billionaire.
Correct.
Crazy.
Correct. Exactly. And it brings a very solid point on how financial literacy, it doesn't affect only the middle to low class. It also affects the high class as well too. For example, I can give you many cases of clients of mine that are attorneys, doctors that are making $500,000 a year, but they're living so above their means that they don't have anything in place, or what they have in place is so subpar to what they're doing that they're never going to be able to accumulate the wealth that they have right now for the future. And that's why their kids are going to have to go back to repeat the same cycle.
Unfortunate.
And
it's crazy because, like you said, it's not just for the middle and poor class. Of course, they don't learn this. But it seems like nobody really learns this. Only the select few know, and those that know really have success with it. There's a guy that I'm following for a long time, Bridger Pennington. Have you heard of him?
Yeah.
Fund launch, right?
Yeah.
I actually just got connected with him the other day, but he does the whole hedge fund thing, and his dad did that.
Yeah.
His dad did a form of that, but they made so much money. But his dad it was a cool story. His dad and his business partner was the show-offy one, had nice cars, nice houses. And so when he grew up, he was like, let me go to my dad's business partner. Apparently he's rich, right? And he walked in, he's like, hey, can you mentor me? He's like, ask your dad, dude. And he's like, my dad's poor. What do you mean? He's like, we make the same amount of money.
Yeah.
He's like, oh, my dad preserves everything.
Yeah.
And that's how they preserve the wealth.
Yeah. It's very interesting because the preservation of wealth, it's what allows people to continue to further their career. I think Alex Hormozi said this, taking a big risk with a little bit of money, and then how to preserve wealth is to take a small risk with a lot of money.
Well said.
Right? So that's the way that I look at it. And life insurance, for example, and the way that these trust structures work to be able to continue to preserve wealth and continue to further their generations, it's the same way. It's like you're taking a very small risk with a lot of money.
Little risk, big money. And big risk, little money.
Yes.
Genius.
Yes.
Bro, I want to get into what we're doing on the other end of the spectrum.
Correct.
Hedge funds, private equity, raising capital, all that. But before we do that, I want you to share that example that you gave me that, my mind was expanded this way and you blew this side out too. So now give that example so people can understand a visual example of what infinite banking and insurance does.
Yeah. So you said it earlier too, that before your dad, you thought life insurance was a scam.
Correct.
Right? Most people think that way because they're like, why would I put all this money into a life insurance plan?
Well, my whole thing was like, so we don't get paid unless he dies. So are we counting on him to die? It's fucked up. Like, that's not how,
And most people have that thought, right? Because we've been trained and we've been marketed to think life insurance is for death, right? Because, for example, you have your phone insurance is to make sure that your phone is still operational, right? Like your screen cracks, your speakers get damaged. You use your phone insurance that Verizon gives you, for example, or Apple gives you to go change those parts. Same thing goes for flood insurance, home insurance, car insurance, right? The extreme case is when the car gets totaled, right? Or your phone gets completely destroyed, or your house gets completely flooded and you have to move out, right? Those are the extreme cases. And the same thing goes for health insurance, right? We think health insurance is to make sure that I don't die, that I'm healthy and I'm covering my medical expenses. And same thing goes for life insurance. Because if it was meant for death benefit, it would be called death insurance or final expense, which are plans out there that are specifically meant for death benefit, right? Life insurance has a lot of living benefits. And the way that those work is by specifically structuring these plans to have the maximum cash accumulation. So the way that me and my team work is we set up these life insurance plans that have the smallest death benefit possible. And the reason why you do that is because under the IRS guidelines, the life insurance, any money that grows inside of a life insurance is tax-free. So it grows tax-free, you can access it tax-free, and it also transfers tax-free. So how do you utilize and how do you maximize this as much as you can while you're still alive to be able to leverage the cash value that you have to go invest into other assets? So for example, you have, let's just say $100,000 cash, okay? You want to put it inside of a life insurance policy. And the water inside of it is the cash that you've put in. That's the liquid amount of cash value. The bottle outside of it is the death benefit. So again, your cash value is wrapped around a life insurance death benefit. And what's the promise, Alif, that a life insurance gives you and your family?
When you die, you get the money inside.
Exactly. Not only just the money inside, but the bottle around it as well.
You get the entire bottle.
You get the entire thing. Yeah. That's the promise of the life insurance, right? Now, most people, when they want to pull out money out of the life insurance, what they do is they call it a surrender. So they surrender the policy or they cancel it. And all they're doing is that they're opening this and then they're pouring it out. I'm not going to do it because obviously I don't want to ruin the carpets. But that's pretty much what they're doing. They're just pouring out their cash value and that's it, and it's gone. So now you get hit with taxes for any money that accumulated at that point, and it's basically the dumb way to pull out the money.
Oh, so they get rid of the policy completely.
Correct. And that's how you essentially pour it out. It would be like a withdrawal. There's also another way to do it as well too, without surrendering the policy, which would be a 0% loan or
that's
a wash
incorrect.
loan.
Don't do that.
Yeah, I wouldn't recommend doing that unless you're already in the retirement phase. You're 65 plus, and now you're taking money out for retirement. So how most people, like I said, they will either surrender the policy or you can take what is called a wash loan. All that really means is that you're withdrawing the money as a loan and then the insurance company is charging you a percentage, but then they're crediting you the same amount of money. And the only reason why you should do that is only when you're in retirement age. Let's just say you're 65 now, and now you've accumulated all this money, interest has caught up, you have a few million in there, and now you do not plan on paying any single dollar back. You're just trying to essentially retire at that point. That's the only time that you would take a wash loan because you're not contributing any more money in it, and you're not trying to pay the loans back.
Correct.
The smart way to do it as an investor, as a young person, as someone that is trying to maximize their dollars, is to do what is called a participation loan or an indexing loan. All you're doing is you're just leveraging the cash value. Again, the promise is that when you die, the insurance company is going to pay the bottle with the liquid inside it. Now, how you actually borrow it, let's just say the insurance company is going to see this as collateral and they're going to say, we're going to give you 75% of this. So now they're going to give you another bottle with 75% of the cash value inside of this. And again, this is not your money. This is the insurance company's money that they're loaning you. So let's just say this is costing you 5% every year. Inside of the policy, we already established that you're making 8, 10, 12% interest every year. So now, if you do the math, 5 minus 10 or 5 minus 8 is 3%. So internally, you're making 3% inside of your policy, and you still have cash on hand to go invest into other assets, other avenues. And therefore, you're double dipping on your money while keeping the original asset tax-free. And if you want to go a step even further than that, you can structure these plans inside of an S corp, and you can have your corporation own it as a corporate-owned life insurance plan. And guess what? Every single dollar that goes in there becomes a tax write-off. So you have a fourth tax benefit at that point.
That example is just mind-blowing. So now let me ask you this. Okay, two things. One, any other insurance agent I ever talked to made that shit sound boring as fuck. Okay, that was one problem. So I'm like, get out of my face. I don't want to buy this. But now you've made it very relatable. You made it like, so now as an investor, I want to pull it out. I want to make 3 to 5 to 8% on my money. I want to take that money while my portfolio is growing. I want to be able to use that money in real estate and other ventures. So I'm kind of double dipping it. Why isn't that taught? Like, what's your opinion on why is it not taught?
Man, I'm gonna get a little bit of heat on this, but
No, you're not. Go ahead. Say
no,
the truth.
I've already been getting heat from it from the beginning of time, because I have taken this approach from the beginning of my career. So 8 years ago when I started in this industry, I was the typical commission breath life insurance agent. That's why I made a lot of money. That's why my name Wulf comes from that. You know, the movie Wolf of Wall Street was getting very popular around the time, and I was the top producer. I got on stage at a recognition. I started doing the fucking chant, you know, so that's how I got the name Wolf. But then a couple years after that, I started realizing is like a lot of my policies were canceling. So I was getting hit with fucking chargebacks. And I was realizing it's like, yeah, I'm a great salesman. I can pretty much persuade or hard close anybody, but the business that pays is the business that stays. And that's a hard lesson that I learned. And I was like, okay, I'm going to go independent. I'm going to go with a broker deal like WFG that allowed me to essentially have all these contracts with these insurance companies, and I can pretty much just run my business how it is. There's no quota minimums. There's no pressure to make these policies or anything like that. It was very just like, here's a system. If you want to follow it, great. If not, good luck. And I was like, okay, I'm going to try my luck. And 5 years after that, I am where I am today. And for the past 5 years, what I've been doing and what I've realized, and the reason why this is not taught, is because it doesn't pay that well. So how a life insurance agent gets paid is a commission of the target premium. What is the target premium?
And that's why they don't set it up correctly. They're trying to make the most money.
Exactly. So I'll explain what is a target premium. A target premium is, let's just say, Ali, you come to me, it's like, look, I want to put $100,000 into this policy. If I'm the wrong type of agent, I'll start salivating. You know why? Because you don't have the knowledge that I have. All I got to do is I got to close you on the idea, and then I can write the policy however it is. You won't know unless you actually look into it, right? So essentially, I can write the policy to make the target premium $100,000. And if I'm working with another brokerage, for example, like FFL and all these other companies that pay 100% commission or more, dude, you just literally transferred your $100,000 into my $100,000, because now I just made 100% commission. And you won't know until it's already too late. And guess what? All I have to do is have you wait like 30 days. And then after it's past the free look period, even if you try to get your money back, you're going to surrender the policy. You essentially lost that money because you can't get that money back after that 30-day free look period. Yeah. So what happens is and this happens every day. 98% of the life insurance agents don't know how to structure these life insurance policies. And I want to believe that they genuinely do not know, because if I think that they're genuinely doing it the wrong way, that means that we live in a very dark world. And it means that there is no hope for humanity, because there's a lot of people right out there that are doing horrible to these people. And I actually used to have a friend who I was going to do business with. We were trying to partner up. He was one of my best friends. He ended up going around my back, starting with one of my competitors, started stealing clients, stealing agents from me. And I knew the type of person he was, and I knew the type of policies he would set up, no matter what he told everybody. And a couple months back, one of his clients reached out to me.
Came back.
And was like, hey, man, I know you used to be friends with this guy, and I know you're a specialist in infinite banking. Can you take a look at my policy? And he told me, he's like, hey, this is how much I wanted to put a month into the policy, and this is my max. Once I looked at the policy, he set up the minimum premium, the minimum target premium for the amount that he said he wanted to be his max. So his policy, long term, he would have lost $50,000 over the span of like 40 years. So the answer is, why is this not taught? Is because it doesn't pay well. Because in order for one of these policies to actually make sense and perform, the agent has to cut their commissions by 70 to 90%. So on a $100,000 policy, I will make more than maybe 8K, as opposed to somebody else that would make $100,000 on that same policy.
Lesson number 1, Circle Syndicate, lead with value. Stop doing slimy shit.
Yeah, man. People get so lost on this commission. They just need the money now.
We were just talking about short term versus long term. Most people, they lose the opportunities because they only see, short sighted. We could have made, you got me for 50K. We could have made 50 million. You know what I'm saying? Like, you got your little 8 to 10K. Imagine if you change someone's life and help them set it up correctly. Now you have, a brother for life, you know what I'm saying? And there's other ventures you can do together.
So all my clients, and I post all my clients that they leave me reviews. I post them on my Instagram because I want people to go message them if they doubt me for some reason. Yeah. If they think I'm a gimmick, dude, I tag all my clients. Go message them. You'll see they're still my clients. I have one of the highest retention rates here in the industry. My clients don't fire me, quote unquote. And it's simply just because I do right by them. And that's why I haven't bought a single lead in 5 years. I don't buy leads. The clients come to me because I provide value first. I teach everybody this. Like, that's what I'm saying. Like, the industry hates me because I give. You
give the sauce on the strategy.
I give the sauce, bro. I give the sauce for free. And that's why I have a lot of people that talk shit and they say like, oh, whatever they say.
Eliminate the distractions. You're good.
Yeah.
So infinite banking, where do I sign?
And the dotted line.
Exactly. So let's shift focus a little bit to raising capital, hedge funds, private equity, the space that we've been working on. So Wulf and I connected through our friend Connor. Shout out to Connor.
Yeah, Connor's a beast, man. He's a dog.
He's on fire right now.
Yeah, he is.
Like 60, 70 chats that we already started.
Oh my God. I lost track.
Yeah, I lost track. I got to create a CRM. We're in the process. CRM, deal flow, sheet coming soon. So he connected us and I was like, hey, my goal is to eventually start a hedge fund. This is actually before me and Gianni or me and Dan and Robert even connected. So I was just like, $, hedge fund, connect the dots, use marketing, find money, find deals. That's what we're going to do. So you got me on a call, me, you, Connor, and another person, and he was just giving me the strategy. He's like, I recommend take this route, take this route, take this route. Then we started talking, or like, hey, give me all the products that you have, whether it's like all the different types of ways you raise money.
Yeah.
And then now we just got to find the deal and connect the dots. So we have several at this event, people coming out, and we're going to raise funds. That's what we're going to do. We're going to connect the dots, make businesses come to life, fulfill on real estate developments and go from there.
That's right.
So talk to me about that. How'd you get into that industry?
It's very interesting. So I think it was 2 years ago, I met John May at an event that he was putting together with my friend Kai. Shout out to Kai. He does credit repair as well. And I went to an event, and at the time I was building my business for infinite banking, and I was dabbling a little bit into Airbnbs and Turo and stuff. And the only thing that I needed was funding. That's the only thing that I was missing. So I got there early. And Kai introduced me to John May, and he used to be a banker for private client at Bank of America. And so I started talking to him and stuff, and dude, I was like, man, this is the last piece that I needed. It's like, not only I can
funding for yourself or funding for your clients?
I can get funding for myself, but then he was like, he liked my energy so much. I'm a people person, right? So I want to work with people. You know what I'm saying? It's like, if I can get behind what you're doing, and I'm not already doing it, dude, let's partner up. We'll blow it up together. And he pretty much offered me that. I was like, hey, dude, let's run it. Let's see who do you know that needs funding. And for the next week, every day, me and him spent the days together. Like every day I was with him, I was getting him in front of people, my people, and we were getting deals closed. We were getting people funding constantly, like back to back to back. And then fast forward to 2 years now, this entire time, me and John, we've been able to build relationships, not only with traditional bankers and conventional like SBA, stuff like that, but I've been able to make connections with family offices, hedge funds, private equity firms, and sovereign funds, places that you go to when the amount is too big for the bank. So for example, if you try to get $5 million for a deal, right, or over $5 million for any of the deals, most often than not, you try to go to a bank, they'll deny you. They won't even look at it.
Of course.
Because it's too big. So now you have to go to private lenders, not institutional lenders, right? You can go to different family offices. That's essentially how they make their money. They invest into some of these deals that make them good money. They make them good returns because, again, that's how banks make their money. Banks make their money by lending out money.
People don't know that. They take your money that you deposit. That's why you got to pay to get it back.
Exactly.
They lend it out.
The banks lend out 9 times. 9 times whatever you put in there. So let's just say if you have $100,000 in your bank account, you have $1 million in your bank account, guess what? The bank is landing out 9 times that.
And at the same time, only getting you 0.002%.
Nothing. Basically, they're charging you fees to keep the account open.
100%.
So that's why John exited Bank of America, because he was denying people, and he saw as like, dude, I'm not able to help anybody in this game. So I'm just gonna exit.
Or at that point, get them a loan that they can't even, it's
yeah,
ridiculous.
dude. So it's like, and because if you work for one bank, you can only offer that bank's products, that bank's instruments. Yeah. But if you can exit that and you become the source, now you have options. What people want is options, man. That's the biggest thing. That's why I think we don't have competition. I don't have competition in infinite banking. I don't have competition in funding. Nobody can do what I do in the funding space. Nobody can do what I do in the infinite banking space. You know why? Because I offer them options and I offer them the experience that I have. I offer them the personal relationship. Because most people that do infinite banking, it's kind of funny how I actually started into this, and how I heard it is because Nelson Nash said, oh, use infinite banking to buy a car, use infinite banking to buy a house, to go on a vacation and stuff. And that's great, right? Because instead of taking a loan to do that, you can become your own banker. Yeah. But why not take it up a notch? Why not use that to invest and make more money?
Then that you can use that money.
Exactly, right? Assets. But now, okay, let's just say you offer that, right? Okay, you do this and then you can invest. And now they come to you, okay, where do I invest it? Oh, I don't know. I didn't want to be that. Now, when a client comes to me, he's like, oh, where do I invest this money that I accumulated? I got you. What do you want? Real estate? Boom. I got you. What do you want? Private equity? Boom. I got you. What do you want? Crypto? Boom. I got you. Turo? I got you. You want to buy a business? I got you. You know what I mean? I want it to become the hub. And now if they want to buy a business, guess what? We can finance them as well too, because people don't know this. You need the same amount of money down to buy a business than you need to buy a house. Most people think, oh, if I want to buy a business, I need to have the full amount. No. The SBA will finance 90% of the money. And if you want to go the conventional route, they'll do 80%.
I gotta lie, I didn't even know that.
Nobody knows that. Nobody knows that. People think, oh, real estate is the best game. Look, long term, I agree. You should have some real estate investments in that. But if you're just starting out, you just want to get some cash flow, you don't have that much capital, let's just say you just saved up 50K, dude, buy a business. Why? Because the business is already cash flowing. You can find a business like HVAC, plumbing, something that's already cash flowing, that has 20 plus years of experience. Maybe they don't have a website. You buy that business for 50K down, something like that.
And ramp it up.
Ramp it up. And then 2 years later, you sell it, but you still have the cash flow coming in every month. So you replenish your infinite banking policy. You pay off the SBA loans, whatever you want to do. And then when you sell it, you get that big check. And then you can go invest into real estate. Then you can go invest into private equity.
And then rinse and repeat.
That's it, bro. That's it. That's literally the plan that I tell my people. So not only I'm able to help them preserve their wealth, I'm also able to help them find investment opportunities, and I can get them the financing for that as well. And if you want to go a step further, I can help them with their taxes as well too, because I have an internal tax team that specializes specifically in this type of strategies. So it's like a full service circle, man.
You're not the Wolf of Wall Street. You're the Wolf of all streets.
Yes, the Wolf of Wall Street.
Yeah, all streets. There you go.
That's awesome.
It's crazy to, now that we're having the circle event, learning this information, being around people that are, doing crazy things and changing the world. This is what we were talking about with me and Kane. It's like, we're setting this up so our peers, everyone that's kind of made a little bit of money, have a good foundation, have big plans to change the world. We can learn from each other, and really, that's the whole point of the Circle Syndicate. So I'm glad you're here, Doug. Man, I'm glad you saw me valuable enough to join, man. I'm very, very grateful to be here, and I cannot wait to see what we can all do together, man. And like 100%. I said, look, the goal for that me and John had with Elevate Capital is we want to be able to deploy $1 billion into the community, because it doesn't have to be, the typical, when people think about finance, they usually think about white collar, like old white people, We can change that. We can change that scenario, man. Oh, we will. I think our generation's changing that right now.
That's it. We're here to serve the community and give back to the community. That's it.
100%. We were just talking about this earlier. Like, it's gangsta to be a billionaire. It's more gangsta to have a family. Instead of what we traditionally thought what was cool. Now it's to be an entrepreneur, to be free, to be fit. That's kind of what we're bringing back. So
that's right, bro.
I'm glad we're doing that all together.
Same, man. I'm super grateful to be here.
Sweet. Anything else you want to mention before we wrap it up?
Nah, man. Just reach out to us if you need infinite banking, if you need funding.
Shit appears on the bottom.
Let us know, man. We'll fund your deals. We'll get you set up and join the circle.
There we go. There we go. Thank you, sir.